topic today, which actually, when we plan this topic, we are thinking of a very positive recovery from the COVID, but we all know that after the good news on the vaccine, but actually the infection rate just increased in a lot of countries, and probably everybody will start thinking of whether is this year a good year. So I will start off with some of the positive news first, then we look into some of the risks.
Hi, sorry, Mr. Phua, you haven't shared a slide.
Okay, can you see the screen? Okay. So, I mean, we will look at the positive news first, then we look at the negative risk, which may be some reference for the investment decision. Of course, as usual, the disclaimer is just saying that you don't have to believe in what I say from now onwards. Now, if we look at it, everybody, frankly speaking, I mean, the market also is still believing that this year will be a recovery year and it should be better than last year. But with the new strain on the COVID virus and how the vaccine is going to counter it is something that yet to be seen. But anyway, our base case scenario, we are still looking at this year should be better than last year. That means 2021, the global economic growth should be better than 2020. And one of the major reasons is that you can see that on the world trade, you see there is some recovery, although it has not back to a positive year-on-year return, year-on-year growth, but you can see that it is recovery quite sharply, and I think the momentum will continue. And in fact, if you look into it, we compare to the 2008 financial crisis with the current COVID crisis, you can see that actually the speed of recovery is much faster than the financial crisis, which actually is not surprising as well, because you must understand that during the 2008 financial crisis, it is a financial crisis that spilled into the real economy. Whereas this COVID crisis is a healthcare crisis, right? It's a medical crisis that is suddenly bring the world to a stop. But once the mobility comes back, everybody will start the life as usual. Of course, no doubt that during the, let's say, lockdown and all this, some of the service industry may be affected badly, but it is not a financial crisis. And in fact, we all know that major government and central bank in the world have been injecting liquidity, try to avoid a financial crisis. So what we need is to wait for the mobility to come back. And that is, of course, a big question mark at this moment. But if you look at this, things still look positive, especially if you look at the container price, which I think some of you are already aware. You look at the global basis, first is that it has spiked up a lot. What it means is that the trade actually are very strong, and but there is some imbalance in terms of the container flow. That's why it spiked up, especially if you see that from China to West US, right, or the US West Coast, right, it has spiked up quite significantly. Although it starts to stabilize, but it's still at a high level. The major reason actually it also applied to whether to the East Coast, to Europe. Basically, it's because the Western countries, European countries plus US are still struggling on the COVID, and that's why they don't have sufficient handling capacity because of the staffing issue at the ports. So some of the container is not in time to go back to Asia for another round of export. So this has spiked up, and you can see to the East Coast is the same, right? You can see the imbalance, right? I mean, although it spiked up also from US to China and also to East Asia, but you can see much stronger demand for container, right, in the Asia part, because we are an export region that is exporting goods to the US and Europe. Similarly, you look at Northern Europe, it's the same thing, right? It's a very imbalanced. And of course, this was even make it worse because of the Brexit issue during the month of December, where you have thousands of trucks are being stuck at the border between US and Europe continent. So that make the situation worse. So all in all, you can see to the Mediterranean side also, it has spiked up. So what it means is that the recovery is there, but it's not that even. First is that on the container, probably I think the high container freight price should remain until Chinese New Year is over, because there are a lot of front-loaded demand, because everybody knows that when come Chinese New Year, right, China factories can stop for almost a month. So all this front-loaded has spiked up the container prices. So whether the economic growth, the trade will continue to be sustainable or not, we were able to see once the Chinese New Year is over. On the other hand, like I say, the recovery is not that even, because if you look at the air traveling or the airplanes frequency, you can see that it has never recovered back to the pre-COVID level on a global basis, except China, which is the country that so far are able to contain the COVID practically very well. That's why you see the traveling, and you can expect some spike up here towards the Chinese New Year time. But if you look at the major economy, the G7, the mobility is still weak, right? I mean, this is specific issue because of the Christmas and Thanksgiving. But excluding that, you can see that the mobility, right, among the G7 countries as an average, right, compared to pre-COVID level, right, it is still 30% below. And it will take some time, because you can see that first you have the lockdown, then it dropped significantly. After that, come to summer, right, it recover because everybody start to take summer vacation, start to travel, start to move around. Then when enter autumn, winter, COVID situation getting worse again, and you start to see lockdown and all this, so it start to come up again. Now, I mean, to a certain extent, you can say it's stabilized, but this also telling you that economy may be better than this period of time, but for it to come back here, it still take probably another 3 to 6 months. And with this in mind, it is very clear, this is the IMF forecast, and I wouldn't be surprised that they will revise down again. But at this moment, you can see that there are a number of countries, right? The growth is still below 2019. Although Malaysia, right, IMF is forecasting that we are probably able to sustain a higher growth, but I think with our MCO, probably this may revise downwards, right? May not be able to come back to the 2019 level within this year. And so the only thing is to combat this COVID, besides vaccine, there's another one that we have to keep an eye on, is the development of the medicine that to treat the patient so that they can recover. Because this is another thing, if there is a medicine that can treat and cure, then it is not that so-called challenging for the economy, for the mobility to recover. So you can see, sorry, this is not vaccine yet. This is not the vaccine yet. This is just a comparison on the major epidemic that we have seen since 20th century. And COVID now actually is, quite comparable and start close to Spanish flu. I mean, Spanish flu is estimated about 100 millions or more, but we are now already at 90 millions. So that is where COVID is a serious issue, and we need to see some so-called approach that we can balance between containing the outbreak and also the economic activities, right? I mean, I think that we may not go back to phase one where it's a total lockdown and then sacrificing the economic activities. Now it's trying to balance it. And I am on a little bit more optimistic side is because, I mean, very soon for Northern Hemisphere, winter should be over and weather getting warmer. And there have been already research study that for every 1 degree rise in temperature, right, the number of infection, the percent, will reduce by close to 5%. So as we approaching spring and towards summer again, then, I mean, what we see now will start to become better. So it won't be all the way down the hill, right? I mean, in terms of the COVID number of infections and all this, it will start to recover. But one thing we have to bear in mind is that this COVID-19 will not go away, right? It will probably be part and parcel of our life. For the very simple reason is that this virus comes from animals. So even you can be vaccinated, once your vaccine effect getting weaker, we never know, right? What are the animals still carrying this COVID virus, and it can come back to human being again. So I think we have to live with this COVID-19. The only way we can hope for the best is that ultimately it will mutate like just a normal flu. Then life will be much back to normal, right? So at this situation, you look at the world for the major country, you can see that most of the country, the reproduction rate actually is above 1, right? Above 1 means that the number of infections will continue to increase, right? Malaysia at this moment, we are 1.1, but bear in mind that Klang Valley is 1.3. What does that mean, right? At a 1.3, it says that it takes about 10 days for the number of infections to double. So that's why government has no choice but to go into MCO, although knowing very well that it's going to affect a lot of businesses and economic activities. And the scary part of this virus is because it can cause your immunity system so-called go out of control, and that's why nowadays you can see a lot of cases saying that people are asymptomatic and then suddenly they are die of the virus and all this. So this is something that we have to be careful, but one that we can have some consolation is, unfortunately or fortunately, I'm not sure, depends on which part of the world do you live in, because it is also related to the human DNA as well. Now, this one is a study and was published in Nature. It's apparently, I mean, that's why we can see that in East Asia, right, we see a lower death rate because our DNA is slightly different. It's slightly different from those in the South Asia and also in Europe as well as US, right? I mean, for those who are really interested, you can go and read Nature on this. What it's trying to say, I mean, what the research discover is that for humans that still carry the Neanderthals DNA, they are more susceptible to COVID-19, and when they get infected, probably the death rate is higher. Those are so-called in the red color pie chart. You can see that in East Asia is much less. So to a certain extent, it's also no surprise that East Asia seems to be in a better situation compared to Europe, compared to US. I mean, South Asia, although yes, they are more susceptible to the COVID, but because of younger generations, that's why you see the death rate is not as high as what you see in Europe and in also North America. So, like I say, one thing is that besides vaccine, we also hope that we can get medicine that can cure if you are infected. So there are some medicine some already approved by FDA, I mean the US, either as an emergency use or even totally approved, like remdesivir, which is for mild to moderate cases. So once more and more this kind of medicine being developed, I think life will gradually back to normal. That's why our base case, we are still looking at a better than 2020 scenario, right? But having said that, let's have a look what is the current situation, because everybody is talking about, whether there's a new wave with the virus being mutated and so on and so forth. So one indicator is we call it K indicator. This indicator, what it means is that it can tell you whether a new wave is coming or not, or if there's a new wave, whether it starts to stabilize and converge back to a normal situation. So despite, a lot of, if you watch all the news channels and all this is saying the US is very bad, but if you look at US situation, right, the wave is not that strong, frankly speaking. You look at from K indicator, right? Europe and France is also more or less under control already. Germany, you see for a while it spiked up, a strong wave, now also getting more under control. And like I say, as weather getting warmer, I think things is going to get better. Now, the only problem with is China, where you see actually there's a wave coming in. And so far, it seems that they are able to contain it, but don't forget, come Chinese New Year, if everybody start to balik kampung, whether it will create another wave is something that we have yet to be seen. So one of the risk factors that we may see, it may come from China again. But knowing that China has been successfully containing it after the Wuhan case, I am looking at a more positive scenario that yes, there may be another wave coming in, but probably it should be able to contain and we don't have to worry so much, right? Japan now is in the wave, right? But it start to see a bit picking out already. Korea is already coming off, right? The key question is Malaysia. Malaysia, we have been relatively stabilized, which is not a good news, which means that the number of infection is like what we are now, between 1,000 to about 3,000, on and off. And that will actually drag, right, the so-called the end of the MCO. That will also affect the economy. So we have to monitor and hope that it will come off. If not, it's still a little bit problematic. And of course, it also will affect the market sentiment as well. Now, I mean, one way to contain is, of course, how stringent the government policy. I mean, this is just for your reference. You can see that once there is a wave coming out, government will getting stringent, either it's a lockdown, shortening the number, the hours of restaurant operation, and so on and so forth, right? You can see that every time when there's a wave, it becomes more stringent. When when the wave start to come off, then they will relax it, mobility increase. So I think this we are going to see it at least for the first 9 months of this year. That means on and off. When there's a wave, then there's some lockdown, partial lockdown. Then once it starts to get settled down, then they will relax it. Then it get worse again, will lock down. So economy will still be better than the total lockdown, but you can't expect a very strong recovery, right? Germany, that's why you can see once they get it stronger, right, more stringent, then the COVID-19 being contained, right? China, similarly, I expect a more stringent policy coming in very soon. And Korea is very clear. Japan also getting more stringent to contain it. Malaysia, of course, with MCO, actually it will go up, and hopefully by then, just like what we see here, then it starts to come off, right? Then hopefully, right, within 2 weeks, we are able to contain it. It will come off. It doesn't mean that everything is over, right? Once it come off and mobility start to increase, then after maybe a month or two, then you see another round of the wave coming in again. Okay, so now with all this in mind, like I say, this year I don't expect something like a drastic total global lockdown and all this. So in the base case scenario, yes, COVID is not going to go away, but it's not going to be as bad as what we see last year. Then back to America. I mean, with the new president, what the US will do and how it will affect the world and of course the market. So if you look at what, I mean, here I put Biden, Yellen, and Rose. These three, because Biden, of course, is the president. Janet Yellen, I think you all know, she will be the Secretary of the Treasury, and Rose is the chairman of the Council of Economic Advisor. And if you look into it, I mean, of course, we have to focus on what type of economy policy, trade policy. It's very clear. Definitely, there will be stimulus package. That's why market is already factored that in. Then another one we have to focus on is very likely there will be some policy towards the middle class income or middle income class in US. This is a typo error. Middle income class in US, and what it means, because first you must remember Janet Yellen and Rouse, they are actually expert in the labors, right, in the labor's economy. So it's very clear it will be more focused in US. So what it means is that first, the trade dispute, right, whether you want to call trade war or trade dispute with China, I don't expect any meaningful so-called lenient towards China, right? I think it will be still as tough as what it is now. I don't expect that it will ease off, right? Because they have to focus on the middle income class, right? Creating more jobs in US, right? Actually, you look into it, it's just another way of saying the Donald Trump, America first, right? Climate change, this will have some, I mean, the policy may have some impact on our palm oil, right? This is where we need to keep an eye. And then for some domestic policy, of course, whether they will break up the GAFA company, and that will affect the tech sector performance. Parallel world, I think you don't have to worry so much. It's just between the Trump supporter and then the non-Trump supporter, whether it will continue to create some social uncertainty. But I am not that negative on that. I think it will settle down. So with this in mind, let's look at the trade policy. Like I say, first, because they have to focus on middle income class. And then if you look into US, the US policy towards China has long been established, right, in March 2015. Actually, nothing to do with Donald Trump. It's just that Donald Trump is the president, start to implement it aggressively. You know, for those who are interested, some of you may have seen this slide before, right? You can go to this website, Council on Foreign Relations. You can download this report, Revising U.S. Grand Strategy toward China. I just highlight it. It's very clear stated here, essentially here, right? To consciously exclude China, recreating technology control regime involving U.S. allies that prevents China from acquiring military and strategic capabilities, right? During Donald Trump time, right, it's just US alone, right? He doesn't bother about the allies. With Biden, I think he will work with allies. But at the end of the day, the goal is still the same, right? Prevent China from acquiring acquiring military and strategic capabilities. And all this boils down to, during the Nixon time, where actually the US at that time is thinking that if China is economically modernized, then it will liberalize politically. That means it will go into the part of the Western world being a responsible stakeholder, and then, following the Western post-war order. And China will not challenge American in terms of their dominant position in the world, right? But unfortunately, China has Xi Jinping, right? He has a vision that China wants to be an influential and powerful nation by 2035 or between 2035 to 2050, right? A global leader with national strength and international influence, having a world-class military. So it's very clear, US and China will clash, right? Will clash. There's no way that it won't happen, right? It has happened in the history before, right? When number two rising up challenged number one, right? Some of you may have seen these few slides before, but it's just a recap, right? Most of the time it ends up with a war, right? The most recent one is the fortunate one is when Russia, Soviet Union at that point of time, right, during the so-called Cold War period, physical war avoided. That is the lucky part, right? That time you have the Eastern Bloc, that means the Communist Bloc, and the Western Bloc. And then, of course, when you have the UK and France challenging Germany, technically, ultimately, they form the EU, right? Of course, now UK has left EU. So these are the situations that first we must bear in mind that irrelevant of whether Biden or whoever, I mean, even the president after Biden, post-Biden, the US policy towards China is unlikely to change, right? So the trade war will continue. Whether you call it trade war, tech war, it depends at that point of time which one becomes more threatening to US. Now, back to, like I say, my base case scenario is still relatively positive. I'm looking at, like I say, better than what we see in 2020. But if you look at US, you can see it's also very clear. It has actually more or less stabilized, right? The next one for US to really back to pre-corona situation, first, of course, you need, right, most of the US population to be vaccinated, and then you need the Biden stimulus package. At this moment, I think the fastest you can expect is probably second half of this year. But having said that, market is always looking ahead, right? That's why you see that market is still, right, doing quite well at this moment. Although, I mean, the statistic still doesn't look that promising yet, right? It's stabilized, but it doesn't mean that it's back to pre-coronavirus or pre-COVID situation. Right? Same thing, you look at the air traveling, it's still down. It's still before the pre-corona situation. And like I say, earliest also probably second half of this year. Right? Similarly, you look at the hotel occupancy rate and all this, it spiked up a little bit, but it's still much lower, right? Whether you look at the occupancy rate, you look at the hotel room rate, or you look at the revenue per available room to the hotel operators, all the same, right? Restaurant booking also is still back. I mean, these are the Thanksgiving, Christmas season spike up, but after that, it's just back to normal, okay? Now, Europe is still have some uncertainty this year. Although, like I say, in terms of the COVID, in terms of the economic recovery, it should be on its track. But one thing you have to focus on is that Germany will have an election on 26th of September this year. Why this is important? Because I think you all know Merkel will retire. So who will replace her? And then whether her party can still, together with this SPD, together whether they are able to form majority government or not. If not, because this will create a big uncertainty on the EU as a whole. Because Germany has been the leader for the EU and has been able to unite, or at least to bring a consensus on EU general policies and so on and so forth. So if without a strong leader in Germany, what will happen to EU is something that we have yet to be seen. And at this moment, you can see that the CDU party so-called approval rate has come off a little bit because of the recent COVID. But I think once we entering into spring and then towards summer, the approval rating may improve. And if that being the case, of course, things will not be that bad for EU as a whole. But again, we never know. And some of us know that until the Georgia run off, we all know that the poll survey most of the time get it wrong. So we still have to keep an eye, and that's where the risk on the EU, on the European economy and market, on the European market is essentially on the Germany election. So I think market will start to factor in probably from the beginning of the second quarter onwards on this Germany election. Okay, for China, this year is the 100th-year anniversary of the Communist Party. So the government definitely is trying to boost the domestic GDP growth. That's why it comes out with the dual circulation strategy, right? What it means is that first, domestic consumption, right, is the most important. Then on top of that, the external circulation. There is a big question mark whether the external circulation is benefit to the rest of the world, especially like ASEAN country, or is it the other way around? Because the external circulation can have two implications. One is either China import more, or the other angle is because of the trade dispute with China, the excess capacity start to export to the rest of the world, like ASEAN, and then we probably will suffer as well, because if our goods, our own export goods cannot compete, then we are in trouble as well. So we are not sure, but frankly speaking, you ask me, I am a little bit, right, negative on the external circulation, which means that it will be more negative for ASEAN countries than a positive factor to ASEAN countries. And of course, there are a lot of argument on this part that whether is it for the COVID issue or is it start to hint that China will even start to enable domestic food producing as well. This in Mandarin, so for those who understand Mandarin, you know it, but I'm just summarize what they are trying to say here is saying that actually the COVID virus is not from China, but it's from the frozen seafood. And some of you may be aware that when they mention that, even our Malaysian frozen seafood prawns and all this are included in the list. But I'm going to interpret this more towards that they are trying to encourage domestic food production rather than talking about it's the virus, that's why they want to stop importing food from overseas. So this is something that's why I say the dual circulation, right, may not be that positive to the rest of the world, especially ASEAN, right? So assuming that my worry comes through. What does that mean? When we look at the major Asian countries, I mean, excluding Japan, mainly on ASEAN, like for example, Malaysia, right? 9.2% of our GDP are export to China, right? So one thing, we export relatively on the oil and gas as well, right? Now, if we are talking about more on the climate change and all this, I mean, it depends on how Biden works with China on this part. This may affect us as well. Another part is the agriculture, right? Agriculture as well. So it may not be that positive, although electronic parts, maybe we are still able to. But don't forget, if they're really serious and all out on, because there is a Make in China 2050, okay? So we have to be careful on that as well, right? So if you look at it, of course, Singapore being a trading country, although 13.9% of the GDP are China export related, but being a trading country, they are actually intermediaries. But again, they will still get affected. Taiwan on electronics, so it's much less. But we look at ASEAN, right? Thailand also mainly on food, right? India will be much less because they don't rely and they already quarrel with China, right? So what it means is that if China is serious on dual circulation, it's not necessarily benefit ASEAN country as well. Okay, so back to Malaysia, right? We have started our MCO. So if this one is also not going to be that positive, we can only rely on ourselves. But at this moment, right, just before the announcement of MCO, our mobility also is just hovering at around still 20% below pre-COVID, right? For a while, I mean, these are the festive season, right? Balik Kampung and all these spike up, but at this moment also it's still hovering around here. And in fact, it's lower than that because we know that the COVID case worsened. So we really hope that it can stabilize, drop in another 5%, stay here, and then hopefully if like government optimistic, wishful hope that MCO can be lifted by 26 or after 26, then things can back to much better normal because you see it has been on the uptrend. Then because of the COVID worsen, then it goes sideways. And you can see that, and unfortunately, right, the states that under MCO actually are the economy contributor to the country as well, right? KL, right, accounting for about 16.4% of our GDP, right? I mean, the trend is more or less similar, but KL is still 30% below. There's a 10% gap here, right? Right, technically it's more or less the same, 10% gap here, right? Selangor also, right? So we have to monitor this situation. Penang similarly, and then Johor also same thing, right? So we have to see if, unfortunately, if our COVID situation cannot be contained, then it is going to be quite damaging to our economy. Probably, I think we were definitely below our, I mean, in absolute term, we will be below the 2019 level. In terms of the growth, probably, I mean, currently everybody is forecasting about 5 to 5.4%. But mind you, every 2 weeks of MCO probably will reduce our GDP by about 0.5%. So this is what we have to see. So if MCO prolong, even GDP can go in the negative. So we have to keep our fingers crossed and make sure we all follow SOP as well to contain it, right? For the economy and for ourselves. And you can see, I mean, this one, like I say, just before MCO announcement, there's nothing much, but you can see that people are I mean, in terms of grocery and all this, you see a spike up. In terms of workplace, right, you see some come down, and this is likely to continue. This is just before MCO. This is up to 8th of January this year, the data. Okay. So it's very clear in the first MCO, right, before, or rather to say before 6th of December, about 64% of economy affected. At this round, 66%. So actually, in that context, it's a bit worse. During the CMCO time, right, states like Selangor and all these, right, it's still only about 64 because this one more stringent, you have 66% of economy affected. So we hope that it can really, within 2 weeks, then it's over. If not, definitely it is not going to be positive. I mean, it definitely will be more negative on the Malaysia economy, right? And if you look at loss of job, a percent of total job loss, tourism is already very badly hit. That is about 45%, right? Between October to December, of the total job losses, 45% come from tourism. Despite that, those not under CMCO still can go for holiday. And even for those under CMCO, I think towards the middle of December, they still can go holiday, but it's still very bad for the tourism industry, right? Tourism related. So with MCO, this is going to get worse. And this is definitely no good for the Malaysia economy. So even you look at manufacturing, also have about 15%. Right? You can't run away from that. So how fast we can recover, right? I mean, of course, one is how effective our MCO is. That's one. Another one is how quick we can get the vaccine so that more people feel more confident to move around as usual. I mean, you have to have mobility, right? When the whole world comes to a stop, technically economy won't grow. So that is where, right, if we look at our Malaysia, probably, right, to be back to 2000 or pre-COVID level, we need to wait until 4th quarter of 21, right? Because the simple reason is that even after you are vaccinated, human behavior, I've talked to a number of people, including those in medical field and then those in the hotel industry. Essentially, their view is that even after you get the jab, right, probably for about 3 months, you're still taking a very cautious approach, right? Medical result may tell you that the vaccine is effective and all this, but you still wouldn't want to take the risk, right? You still try not to be back to the normal lifestyle. So in that context, so you take all this into consideration, probably for Malaysia to back to 2019 level, absolute GDP term, probably we have to wait until around 4th quarter of 2021. That means, okay lah, I mean, still okay, right? You still have another 3 months to go. Like Thailand, because of the political uncertainty as well, and because the number of population that is going to be vaccinated, right, it's only 20%. So probably they'll come back on 2nd quarter. And mind you, this quarter is a gone case. I mean, definitely you can't, I mean, very sad for the tourism related industry. You can't expect tourists to come in during Chinese New Year and all this. So it's as bad as maybe even worse than last year. Let me put it this way. Singapore, of course, being a small country, they are faster. Indonesia, because they have started and they are also being a 3rd phase clinical trial for the China vaccine. So probably they are able to come back, assuming that the China vaccine efficacy is all right, with no serious side effect by 3rd quarter of 2021. Philippines probably take longer time, like 2nd quarter of 2022, like Thailand. Okay, so with all this in mind, right, economy, global economy, mobility has not fully come back. So what does that mean to some of the commodities like oil, right? If you look at it, it's very clear, right? Oil price to a certain extent, right, move quite in tandem with the mobility. This is a G7 mobility. Of course, this part is the economy has not recovered. Then here, expectation of the economy recovery. On top of that, right? You know that OPEC Plus is trying to contain the excess inventory. That's why you see oil price getting stronger. Of course, if assuming that our base case scenario, which is optimistic, then towards second half of this year, you will see a little bit more upside on the oil price as well. Okay. And if you look at the EIA forecast, they're also forecasting that, right, third quarter onwards, this year, third quarter onwards, right, supply-demand equation should be quite balanced, that's why we are looking at a slightly stronger oil price in the second half of the year, right? And then for palm oil first half, I think is going to be good, but towards second half, where that is where the risk factor come in, when Biden start talking about climate change, when Europe start talking about environmental issue, that will have a negative impact on our palm oil. So that's where we see that palm oil will probably have, and probably with the increase of the inventory, we see weaknesses in the second half of the year. Right? Gold, last year was a good performer. This year, I think it will just follow the cyclical, seasonal factors only, right? Last year, you see, because of course during crisis is fall. After that is one of the so-called safe haven. That's why it is performing quite well, right? But I think this year it will be back to the seasonal factor, right? You'll see, yes, upside on the gold price, right? Until probably middle of February, or maybe slightly later, because some of you know that I always say that there's a seasonality in the gold price, right? This part of gold price, right, is because we are towards Valentine's Day, towards the gourmet, where, you know, men will buy some gold jewelry to their girlfriend, to their wife. So there's some demand spike up here. Then after that is the Indian wedding season, right? Towards end of the year is Christmas season. I think this year, based on our so-called optimistic scenario, it will follow the cyclical seasonal trend, right? The upside is also relatively not as good as last year. Okay. Although in terms of compared to share market like S&P, right, the ratio is still actually quite low, right? It's not at the high end of this part, it's relatively low, but it's also not to say that it's far from the historical situation. Okay. And you compare to the treasury year, that's one thing. Treasury year has started to go up. So I will foresee that there is, like say, you follow the seasonal trend and it's not going to be as strong as what we can expect to see last year. Okay. Now, in terms of market, if we look at all the market, I mean, this is the last year performance, right? And everybody knows well, Nasdaq is the one that performed the best. The rest, yes, has recovered, except for two markets, which currently is coming back, Asia ex Japan, right? And our KLCI as well, which is relatively, I mean, not a good performer last year. So what will happen this year, right? Again, this year, first is we must be very sure that the developed countries, right, are essentially driven by liquidity, right? You can see whether EU, Japan, you know, liquidity is coming up. I mean, it's still excess liquidity that will support the market, and definitely we hope that some of this excess liquidity will come to the emerging market and ultimately come to Malaysia, although the chances is not that high for Malaysian market, right? I mean, for US, let's look at the US market first. I mean, because of the excess liquidity, things at this moment, right, is still on the optimistic scenario. So you can see that volatility, although it never come down to the 17% of a historical level, because below that is definitely bullish, but it's still hovering around 20. It's not that bad. I would say that it's a little bit Goldilocks, because when it spikes beyond that, that is where you can see the market definitely will come down, right? So all in all, now is an interesting situation is that treasury yield go up, but market also going up. So technically, the market is on risk on mode, right? It's on a risk on mode, and this is interesting. Of course, whether it will repeat for Biden or not, yet to be seen. But for the, I mean, people always think that Republicans is the one that always, very positive for the equity market. But if you look at, right, the Democratic presidents, right, except Jimmy Carter, right, first year of the presidency, actually market did go up, right? Like Bill Clinton, first term, 13.7%, then second term, 22.6. Obama also, first term, 18.8, then second term, 26.5. So it's not that bad. First term of the president, first year of the presidency, it looks like market actually should be on the average, you still can have about another 12% upside. So last year performance, I don't think I need to recap it. And this is just telling you that when COVID-19, central bank inject liquidity, market spike up, then waiting for sign of whether how likely the economy will recover and how it will recover. After they have certain confidence that economy is not getting worse, market all the way up, right? Market all the way up. This is for Dow Jones. Similarly, Nasdaq is a special situation, right? After it comes down, liquidity increase, then it's all the way up because, people cannot go anywhere. You have to work from home, stay at home, watching Netflix, doing shopping, online shopping. That's why it's all the tech sector is moving up, right? Because you need new, for those work from home, you need, company may have to give you a better PC and so on and so forth. That's why it's all the way up, right? And is Nasdaq market in the bubble now? Not yet. If you look at the past, this is the dot-com bubble situation. Again, if you look at the absolute, it doesn't seem to be that far. Right? Argument can be it's already in the bubble. But if you look at the trend, Nasdaq has been always on the uptrend. You look at the trend line and then the base. You see during the dot-com bubble, right? Nasdaq ratio of Nasdaq to S&P is from 1.5 times took up to 3.5 times, right? Which is actually 2 times difference. Here, the base is higher, right? We take it even it's 2.5 times, took up to 3.5, it's still 1 time. So it's not a bubble yet, but I'll call it a trough now. But definitely, I think it will be a little more volatile from now onwards. Europe market, I think I can skip because, like I say, not that exciting until Germany election is over. Asia ex Japan start to come back because on the recovery story, we are the laggard, we start to come back, right? So you can see, start to see some sharper uptrend here. KLCI, unfortunately, we are a little bit more range bound. It go up within certain range, it's just stuck there, right? It's just stuck there. Major reason, foreigners, they're not coming in, right? The players are all local. And retail players, like I say, that is a positive part of the lockdown. So I'm not sure these 2 weeks, whether we have more. Some of you know, Robinhood in US is a discount stockbroker, offer zero commission, rather to say zero commission rate. So with this lockdown, whether you have more retailers start to go into the market, that may actually bring some upside to our market for the next 2 to 3 weeks. In fact, last year was a very interesting situation from this part onwards, right? In the past, it used to be, right? I mean, the saying is always, of course, this year you can't go to pasar, right? It always say that if you go to pasar, even market start telling you what stock to buy, that's the end of the market, right? Because retailer is always the last one to enter the market. But last year during COVID, they are the one that lead the market. Retailers come in first, then only institutions, fund managers start to go into the market. So this is the interesting part. Right? This is the interesting part. Now, if you compare, right, where the foreign monies go to, like say, the only country they go to now is actually India. The rest actually is still seeing some net outflow. Although, right, you can see that South Korea, the outflow become less, but it's still on the net outflow. Now, like I say, I'm not that positive that foreign money will come in so soon in Malaysia. Even come in is also quite marginal. For the reason is that, unfortunately, our market, because remember, when foreign funds come in, right, they look for big tech companies. They want to track KLCI. But unfortunately, our KLCI essentially is all economic. We don't have like high-tech counters. Right? In CI, I mean, not saying that Malaysia don't have good high-tech, right? And interestingly, I don't know how many of you are aware of a company called Aerodyne, right? It is a world number 3 drone so-called service provider. World number 3. Unfortunately, it's not listed. I mean, for those who are interested, you can do a Google search. It's called Aerodyne. Then later, if somewhere down the road they go for IPO, you may see some opportunity. It depends on the valuation. But all in all, what I want to say is only 1/3 of our CI are made up of the new economy. So to the foreign funds, it's not exciting at all because if you just invest in 1/3, right? You don't track the index. For them, they want to track the index, but we are all on banks, on the normal consumer staples or even utilities. So it's not exciting enough. The only one is because we have Top Glove, or rather to say the rubber glove company, right? If not, you look at the new economy, it's totally unexciting. That's the reason I think even foreign fund flowing in is just marginal. So all in all, where is the market now and how should we look at it, right? It has gone up. Will it continue to go up? So there are a few questions that you can ask, right? This is the so-called binary tree. First, you ask, are real interest rate rising? I mean, again, this is based on US. I have to say that because US market will influence the rest of the world, right? So first we ask ourselves, are real interest rate rising? Yes, it starts to go up, but it's not significant, but answer is definitely yes. Then the next question we ask, are the spreads between the US government, treasury, and BBB corporate bond, is the spread widening, right? If you look at it, yes, during the crisis time, it always widen. Now actually it's come off, right? It has come off. So the answer is no, right? The answer is no. Then the next question we have to ask is volatility rising, right? I mean, I show you just now, it's not really rising, it's actually a little bit range bound. So what it means, actually, it is still, that's why it's a positive, optimistic scenario. It is great for, I mean, this what I use the word inflationary boom plays, actually, in today's context, in the current situation, is what we call reflation play, right? Reflation, right? That's where in the reflation, first, the market is still in a Goldilocks, but it will go into a great rotation, right? Start to rotate to the laggards, right? Of course, another key issue you need to watch out for this year is the green environment part, and the market may go to some of like EV related in China, and even for the clean energy in US. Then of course GAFA is actually what I'm saying is tech. Tech, you still need to keep an eye, though there may be some volatility. Geopolitical risk. As far as I can see between US and China, I don't think it can get better. Neither is likely to get worse. It's more towards the status quo, right? So actually, it really tells us that we have to be back to the basic. What it means is that essentially, that's why people say so-called reflation play whatsoever. Just to recall, last year, tech stock is the one that going all the way up, right? The major reason is one, people are buying dreams on tech stock, right? They are buying on the future cash flow of the tech stock, right? Because their business supposed to be less affected by the economy volatility, economy cycle. So they buy on the cash flow, and at the same time, last year interest rate was low. So these two add up, right? This one is strong, this one down. That's why tech stock go up. So back to 2021, what does that mean? First is that this one is not likely to change, right? Interest rate, look at the treasury yield, right? It's going on the up. That's why people say that tech stock may subject to some selling pressure. Although long-term growth is still there, so they will see volatility. Therefore, it brings you to another way is that people start look back into the ladder. Why interest rate have come down? So if the scenario is on the optimistic scenario, that the cash flow will start to improve, right? I mean, of course, we take the extreme way to say, let's say, right, if mobility recover, people start to travel, right? Airline companies will start to see business improve, right? Cash flow will improve. This one has come down. Sorry, even this one go up, but this one is improving. So people start to rotate to some of these so-called recovery stocks, right? That's why it's a reflation play. Okay, so with this, I end my presentation. Thank you very much, and pass it back to my colleague.
Okay, thank you very much, Mr. Phua. Okay, let's have a look on the questions box. Then I will choose a few questions to let you answer, Mr. Phua. Okay. Anyone got any questions? Because I just have a look on the question box. There are no question over there. Just some of the technical questions asked about the sound and the audio. Okay, feel free to ask your questions. Okay, but if no questions for you guys, then yeah, got one one audience asked about the insights on the US dollar. Mr. Paul, you are muted, I think. Mr. Paul, you are muted.
Yeah. This year, we are looking at US dollar weaken against major currency, or rather to say most of the currency. For the reason is that I think everybody expecting Biden to have some big spending on the stimulus side, and that will create more demand to raise to raise bonds, to raise money, and therefore, despite that the yield may go up, but people will start thinking that it's better to get out of the US because the debt will start increasing. So, I mean, if on the ringgit term, for ringgit, we are looking at 380 for by end of the year.
Okay, thank you, Mr. Paul. Next. Okay, next question. What's the worst case scenario if the COVID cases still did not subside?
Okay, the worst case scenario is that if the COVID mutate, vaccine is ineffective, and in fact it become more infectious, it will be worse than last year. That means the whole world will come to a stall again. It's a double dip lah, compared to last year, right? So in that situation, market, or despite with the liquidity, the only performer probably are only left with tech sector again. The rest will suffer, including commodities, because no mobility, you don't need so much, you don't consume so much petrol or crude oil, right? Neither on any other things. So, I mean, this is nightmare scenario. Like.
Yeah, okay. Okay. This question quite interesting. How do you see the outlook for the cryptocurrency, especially Bitcoin? Yeah.
Okay. I mean, we don't recommend any trading or whatsoever, right? We don't recommend any trading and whatsoever. So in that context, just for your reference only, just for your reference. So let me share screen. Okay, can you all see the screen?
Yes, we can.
You can? You can see the screen now?
Yep, can.
Okay. Okay. This is what Bitcoin is, okay. I know everybody get excited on that. One thing you must notice is that Bitcoin, they have the characteristic of so-called halving, right? That means every time, right, every 10 minutes, the number of Bitcoins generated, after the halving period, it will reduce by half. And normally, it's about 4-year cycle. Right? It's 4-year cycle. The first halving is in 2012, then after that 2016, and the third one, that means the previous one is in last year lah. And interestingly, you look at when there's halving, the Bitcoin prices go up, right? And like I say, it's just for your reference. History repeat itself or not, I don't know. Every time when there's halving, you see it's 10 times up, 10 times. Here, it's also more than 10 times. So if you believe that, you know where it should go, right? But after that, it will come off. Just mind you, it will come off because the next halving is 2024. Okay, the next halving is 2024. This period is about 1.5 years, right? It's 1.5 years. I mean, here also it's around 1.5 years. So if you look at 1.5 years, and if you believe in 10 times, you know what it means. But again, let me put it this way. The risk side now on the cryptocurrency, not limited to Bitcoin, is that I think you're aware that China has already come out with a digital RMB. And a lot of other countries also will start to have the so-called CBDC, central bank digital currency. Once this start to roll out, I think part of the hype on Bitcoin will disappear. I wouldn't say that Bitcoin will drop to zero, but some of the hype will disappear. But having said that, you still have, right, people who don't trust fiat money, whether it's a really physical printed money or in terms of digital currency. They just don't trust it, because why some people is a die-hard believer in the Bitcoin is because the total number of Bitcoins that can be generated is only 21 million Bitcoins, right? So it's not like normal fiat currency. It's up to the government if you want to print more, right? The normal perception is when you print more money, my money will become devalued, right? So I wouldn't say Bitcoin will go to zero, but just bear in mind that with more digital currency from the governments and all this, the importance of Bitcoin may start to reduce. And of course, in the worst case scenario, let me put it this way, in the worst case scenario, if all the government say Bitcoin is illegal, since now they can come up with digital currency, if they declare that Bitcoin is illegal, then it's only between the, I mean, I would like to use the word collectors, right? It's just like stamp, right? Between the collectors to think that how much it's worth. Okay, so all in all, like say, the risk on the Bitcoin is that with more digital currency come out by the central banks, the importance will diminish. But the other side of the coin is that there's still people who believe in Bitcoin rather than the whether it be digital currency or fiat currency where a country can print without any discipline. So there will be certain demand. Whether it will go up 10 times or not, I don't know. Right? It's up to you whether you believe that history repeats itself or not. Okay.
Okay, hello. Okay, thank you, Mr. Phua. Okay, one question is asked about just now Mr. Phua you mentioned one of the info tech company, right? Can you let us know about the company name because it's not clear. Just now you
Okay.
mentioned about the info tech. Yeah.
I mean, for the Malaysia one, right? It's not listed yet, but it's an interesting company. And I think the Age also wrote an article last year. The name is called Aerodyne, Aerodyne. Currently, it's been so-called ranked as world #3 drone service provider. That means use drone to survey on the infrastructure and so on and so forth. The office is in Cyberjaya.
Okay, thanks for the info. Yeah, so yeah, okay, audience. So I think you heard about the name, right? Aerodyne, yeah. Okay. Yeah. Next questions is okay, based on Mr. Phua, your view, which sector can be monitoring for investments and there's a chance can be doing well?
Okay, I mean, if we talk about local sector,
Hmm.
of course, our tech sector will still be there. And frankly speaking, the glove sector has been bashed down so much, although part of the earning stream has more or less known in the market, but I think there is still some upside potential on that. Then another one actually is the banking sector, right? I mean, when you look at reflation, the time that's where it is. But like I say, you have to be careful a little bit because the bad debts, how it will pop up is something we need to yet to be seen. But as a rotation, it may rotate to the banking sector. Okay.
Oh, sorry, I muted. Okay, thank you. The next question is, can Mr. Phua comment on the potentials of the interest rate hike by the Bank Negara Malaysia next week?
I think next week will be no action. Next week will be no action. I think they have to wait and see. Like I say, they have to wait and see how much impact is the MCO on our economy, right? Although I think the market has already factored in that this year, I mean, not at this moment, this year, there may be another 25 to 50 basis point cut, but I think next week one probably is still NFA lah, no further action yet lah.
Okay, thank you. Okay, so next question is, should we withdraw the investment in China-based ADR listed in US in view of the continuous US-China tension?
If the question is saying that whether you should switch out your investment in US that invested in China company, I would say yes. it's better you switch it over. I mean, for some of the companies, right, you can switch it to Hong Kong to invest, right, for the same company, rather than in US, because yes, there is a risk that they may get delisted and all this.
Okay, thank you. Yeah. Okay. Another question is asked about valuations of US market is getting higher, driven by the liquidity well ahead of fundamentals. So, any risk for market correction?
Okay. I mean, definitely valuation is not cheap. That's for sure. Valuation is not cheap, but when market is still flux with liquidity, still need to look for return, right? There is always still some uptrend, but I would say it's volatile because the next likely chance of, let's say, any correction will be within another, I would say within the next 2-3 weeks. You know, when the fourth quarter earnings is out, then the company also give that guidance, right? If there is a downside surprise, then probably you'll see some convenient excuse to take profit. But after that, it will come back. I mean, again, like I say, money has nowhere to go, right? I mean, if you want to talk about the worst case scenario, like say COVID is still out of control, vaccine becomes ineffective, US in a chaotic situation, you know, whether you call Occupy White House or Occupy the Capitol Hill or whatsoever that bring the whole US into chaotic situation. And then, I mean, these are, if you like this type of nightmare scenario, and then where North Korea seeing that US is in a chaotic situation, they may start to launch some missile to Japan, to South Korea. Then China will take the opportunity, you know, to totally control the whole South China Sea. And then Middle East, Iran start, you know, attacking the neighbors and all this, and then fight with Israel. That is the worst case scenario that I also wouldn't know how low the market will go. But at this moment, like I say, all these black swan event, at this moment, I would really say it's a black swan and may not happen at least on the first half of this year.
Okay. Another questions from David is with US presidents going for a new transitions, assuming it's a smooth transitions. So how do you see? I think it's Biden, right? He typed Biden policies on China.
Okay, like I said just now, I don't think there's a big change at this moment because another thing I didn't mention just now is that beside the US grand policy towards China, which was written in 2015, right? It's irrelevant. You know, at that time, Donald Trump is not president yet. Now, another factor you must remember, although yes, I mean, of course, we still don't know whether Donald Trump will be officially impeached. I mean, it's proposed, but ultimately whether technically, you know, he is guilty or not, we still don't know. Put it this way, Donald Trump also, you know, have made some so-called smart move in a sense that, you know, the last 2 weeks, right, he implement a lot of policy, I mean, tough policy towards China. So if Biden try to relax that, then bearing in mind that US is a country that they will have midterm election 2 years down the road. So this will give Donald Trump or even Republicans an opportunity to say that, look, as what we have said, Biden cannot be trusted. He is actually, you know, a China guy and is sacrificing, selling out US interests. And then the midterm election, Democrats will lose both the House and the Senate or the whole Congress. So that also is a nightmare for Biden and for Democrats. So I don't think there is a change in policy at this moment, not until the midterm election is over. which is 2 years down the road.
Okay, thank you, Mr. Phua. Okay, I think this is the second last question. Okay, any advice or foresee the electric car shares like Tesla, NIO, Xiaopeng, and etc.?
Okay, for EV related, whether it's cars, batteries, and all this, I mean, it's still at a very early stage, frankly speaking. You don't know who will be the ultimate winner, right? So, I mean, it's all right to have exposure, but also set your so-called price target, how many percent return you have, then you will take profit first. Of course, you may miss some of the upside like Tesla, but I think it's still at a very early stage that you don't see a very clear winner yet. I mean, even Tesla, frankly speaking, although the share price is super, right? Even Tesla, you can't say it's a very clear winner yet because you look at Tesla car, it's a very niche market, right? It's a very niche market. I mean, it's just like it still can be considered like a luxury mania type of market yet. It's still not a mass market type of so-called car manufacturer. So, I mean, to manufacture large numbers of cars is a different ball game. So at this moment, there's no clear winner yet. I mean, it's still a very early stage. Some of the decent company is all right, but you can see even, you have a lot of so-called alliances, between Taiwan, China, or Japan, China, and so on and so forth. So there's no clear winner, but it's all right to invest there, but make sure you know what is your target and get out when you hit your target price. Okay.
Thanks for the view, Mr. Phua. Okay, last questions for today. These few days, there are many reports of tax companies and payment companies alienating Trump and his supporters. So will it be a damaging effect to the global markets?
I wouldn't think so. I wouldn't think so. I think the next one you need to watch on the tech company is more towards the after buy, because don't forget, but it's also interesting. I mean, Democrats is always the advocate on the so-called dismantling the big tech company. So when Biden becomes the president, how he's going to balance between the voice of trying to weaken the big tech company, at the same time trying to balance that they shouldn't be weakened so much. One interesting part, if you can take an example, is Microsoft, right? Microsoft, last time, I can't remember which year already, actually the government is suing Microsoft. For those who can remember, I mean, nowadays we don't call Internet Explorer for a while, right? Internet Explorer is bundled together with your Windows. Then you always get it and it's being set in as a default. Then there is a case on Microsoft by the US government to say that they should so-called break up Microsoft to encourage competition. But although ultimately they didn't do that, but because in the process, actually it encouraged people to see there's opportunity and there's a, so-called to penetrate or to grow within that market. That's why you have Google, you have others coming out. So the current context, they may not dismantle it, but in the process, you may see some newcomer coming up. It's just like, example now, the interesting part you may want to keep an eye on, again, I mean, forget about, Alibaba, which is a China side. Within, the Western country, right? We all know that Amazon is the biggest player, right? But now you have the Shopify that is coming in, and it may challenge Amazon. So Amazon may not break up, but because in the process, right, they will tie Amazon hands, one hand at the back, and let the, let's say, Shopify to grow bigger, then it's interesting. Then you'll see how it will evolve. It's just like between Microsoft and Google. So all in all, I don't think it will be too negative to the tech company, but at the same time, they'll find a way to encourage competition. Okay.
Okay, thanks for the answer, Mr. Phua. Okay, so we'll call it a day. Okay, due to time constraint, we are unable to answer all the questions, but thanks for all the audience who are providing the questions. Okay, so if let's say you got any inquiries or questions you want to ask, to let us know, can email to us or call us. Okay, yeah, so we'll call it a day. Thank you, Mr. Phua, and thanks all.
Okay, thank you.
Okay, thank you. Bye.
And
Take
stay
care.
safe.